Wall Street ended lower on Friday as the war in Ukraine overshadowed a much better than expected February jobs report that pointed to strength in the U.S. economy. The Dow finished 0.5% lower and the S&P 500 ended more than 0.75% lower, while the Nasdaq lost more than 1.5%. Rebecca Felton, a senior market strategist at Riverfront Investment Group, said given the backdrop of an ongoing war in Europe, it's hard for investors to focus on a strong U.S. jobs report.
Well, it was very encouraging just from the standpoint of the fact that the numbers were better than expected, the fact that the unemployment rate continued to move lower. I think it's down to 3.8%. So you're essentially back to pre-pandemic levels in terms of actual unemployment numbers. And there actually, I think, are more people working than there were then. But nonetheless, that is right now has to be considered looking in the rearview mirror because no one is worried so much about some of the good economic data that we've had this week. And looking forward, everything is going to really key off the price of oil, I think.
The war in Ukraine continued to boost energy stocks as crude oil prices and other commodities rallied once again. Financial stocks led the broader decline on Friday as investors worried about how sanctions against Russia may affect the international banking system. The S&P 500 Banks Index sank again, bringing its losses for the week to nearly 9%, its worst weekly decline since June of 2020. Big tech stocks Apple, Amazon, and Google parent Alphabet all lost more than 1% on Friday, and one of the session's biggest losers was WW International, formerly Weight Watchers, dropping more than 8.5%, after the Federal Trade Commission said the company illegally collected personal information from children without parental permission. The U.S. economy added 678,000 jobs in February, blowing away economists' forecasts and lifting hopes that the economy could weather mounting headwinds from the war in Ukraine, rising inflation here at home, and potentially a more aggressive Federal Reserve. The surge in hiring last month pushed the unemployment rate down to a two-year low of 3.8%, a 0.2 percentage point drop from the 4% rate in January. The jobs number for that month was also revised higher. In a tweet, the president of the Economic Policy Institute and former chief economist to the labor secretary under President Obama called it, quote, mind-bogglingly fast and sustained growth. But the Labor Department also reported that average hourly wages were flat last month, likely because of the return of workers in lower-paying industries. Companies have been raising wages to attract scarce workers, which is also contributing to higher inflation.
The labor market is extremely tight.
Fed Chair Jerome Powell this week told lawmakers that the U.S. Central Bank would be prepared to move more aggressively later if inflation does not abate as fast as expected. The February employment report's flat reading for wages could ease some of those concerns, but pressures remain. Inflation was already a headache before Russia launched a war against Ukraine last week, which has pushed oil prices higher and invoked a barrage of sanctions against Moscow. One senior economist at Wells Fargo interviewed by Reuters said, quote, there is plenty of concerning news in the world right now, from the Russia-Ukraine conflict to sky-high inflation, but the U.S. employment recovery continues to be a bright spot amid the carnage.
Russia's billionaires seem to be moving some of their most prized assets a long way from the US or Europe. The mega yacht Titan was one of 5 such vessels spotted sailing off the coast of Maldives on Friday. Owned by Alexander Abramov, a co-founder of Russian steel producer Evraz, the super yacht arrived on Monday. My Sky, owned by retail magnate Igor Kasayev, was also spotted in the luxury holiday destination, docked on the north of capital Male on Thursday. The billionaire owners of 5 vessels are either on existing sanctions lists or face calls to be added. Maldives has no extradition treaty with the US, and a spokesperson for the Maldives government did not respond to a request for comment. Meantime, French authorities seized 4 cargo vessels and 1 luxury yacht linked to oligarchs on Thursday as the US and other governments ramped up sanctions on Russia's super-rich. Finance Minister Bruno Le Maire said French customs seized the 88-metre Amore Vero, allegedly belonging to Rosneft boss Igor Sechin, as it tried to leave the Mediterranean port of La Ciotat. Earlier in the week, Forbes reported that a mega yacht owned by Russian billionaire Alisher Usmanov had been seized in Hamburg. Officials in the German port have denied that, but say the vessel won't be handed over to its owner.
Russians are lining up to withdraw cash while they still can, but some may be turning to an alternative. The price of Bitcoin has jumped since fighting began in Ukraine. People there and in Russia are thought to have turned to cryptocurrencies as an anonymous way to store and move money. Some fear that sanctioned people or firms could be doing likewise, potentially weakening the effect of a Western crackdown. And that has led to calls for a freeze on Russian crypto assets. On Friday, two of the world's biggest e-coin exchanges rejected that idea. Coinbase and Binance say they won't put a blanket freeze on Russian accounts. Coinbase chief Brian Armstrong said everyone deserved access to financial services. But he said the firm would enforce a blanket ban if Washington imposed one. Both exchanges said they would comply with all sanctions and said they were well equipped to detect abuse of their platforms. By Friday lunchtime in Europe, Bitcoin was down over 1%, but still well above pre-conflict levels.
Sony and Honda announced on Friday that they're joining forces to develop and sell battery-powered electric vehicles. The two Japanese companies said in a statement they would form a joint venture this year and aim to begin selling the first model in 2025. Honda will be responsible for manufacturing the first model, while Sony will develop the mobility service platform. That's after Sony chief executive Kenichiro Yoshida announced plans in January to create a new company, Sony Mobility, saying it was exploring a commercial launch of electric vehicles. Although its once dominant position in consumer electronics has been eroded by Asian rivals like Samsung, Sony still has sophisticated technology in areas like sensors, which are critical to autonomous driving. The rapid shift to embrace EVs around the world creates opportunities for tech companies to join the auto market, since those vehicles are easier to manufacture than cars with internal combustion engines. But at the same time, tech companies face challenges of meeting rigorous safety regulations